Hello, everybody. Jackson here with the Well Squad. Today, talking about Meta platforms, aka Facebook, aka a disappointment to have in your portfolio. It is currently trading for 104, the lowest in about 5 or 6 years. We're going to talk about more about that later. Down 20% in after-hours trading due to a lackluster earnings report. Was trading at 129 before the earnings announcement. Now at 104. Even at 129, it was at the very, very bottom of that 52-week range, which ranges from 122 to 353. Imagine at least a year ago, Facebook was trading for 353. It's crazy. So let's look at the chart first off. You can see trading view of at least this account does not take into account after hours trading, right? So that's where Facebook stock currently is, 104. So that goes all the way back to March 2016, right? January 2016, sorry. January 2016, you could buy Facebook, hold it the entire time, still hold it, and you would be breaking even, maybe even losing money right now. So not a very good time to be invested. And this is adjusted for dividends, which there is none. So let me turn that off. Log chart, you see right here. Not a good place to be in for Facebook. Let's just say that. Let's look at the actual earnings report. You can see Meta reports third quarter 2022 results on their website versus the SEC.gov EDGAR search. This is when they released it first and where it is actually available right now. So just a couple things I want to point out is look at this change. You can see revenue fell 4%. Costs and expenses grew 19%. Income from operations fell 46%. Provision for income taxes is kind of minor. You can see here net income fell 52% from this time exactly a year ago. And EPS diluted EPS fell 49%. All right, and you can see here daily active people was 2.93 billion, an average of 4.4% year over year. Monthly active people 3.71 billion, 4.4% increase over year, 4% increase year over year. Sorry. You can see here ad impressions and price per ad. Ad impressions delivered across our family of apps, which is Facebook, Instagram, WhatsApp, increased by 17% year over year, as the average price per ad decreased by 18%. So advertising demand has kind of gotten slow. And we get actually down here, it gives us some more insight. So here, we report our financial results by two reportable segments, Family of Apps and Reality Labs. Family of Apps includes Facebook, Instagram, Messenger, WhatsApp, and other services. Reality Labs includes our augmented and virtual reality related consumer hardware, software, and content. So this is Reality Labs, right? We can see, here we go. This is Meta Platforms. Reality Labs is RL. Family of Apps is FOA. So you can see Reality Labs right here. Last year was 558. That's in revenue and in millions. Now it's 285. And you can see the loss has gotten bigger too. While the revenue has fallen, the loss has gotten bigger. And the actual impact of this is they're putting more and more money into something that is not entirely working. And that's why the stock is hurting so much, because while the economy is hurting, they're going even harder into something that is uncertain, essentially betting the whole company on it. And, well, it seems like Mark Zuckerberg is willing to go down with the ship. And that's what these people are seeing. And it's, of course, scary to be a shareholder during that. We can see right over here the GAAP revenue. But what we want to look for is something cash data. No. Cash flows. You can see net income has fallen from 9 billion to 4.3 billion. Cash provided by operating activities has fallen from 14 billion to 9.6. Net cash used in investing. Doing No, the multiple for that, uh, probably, you could say by 30, an increase by 30. Net cash used in investing activities. Uh, a main reason why could be because they're investing so much money into, um, their actual reality labs, which is the VR, AR type stuff. It's not looking good for Facebook. I'd be scared if I was a shareholder. What we do know is not very much besides they're putting in a ton of cash, a ton of free cash flow into this space that is not really a actual space yet. They're essentially starting it. So if they get started, good for them. It's the multi-trillion-dollar company in the future. If not, they could keep falling harder and harder every single time they talk about AR, VR until they cut it clean from their balance sheet, from their income statement, and just focus on Facebook, Instagram, WhatsApp, Messenger, and stay that course, right? Until then, reality is uncertain. Uh, I guess reality is certain. The future is uncertain. You can see here was once 330, 360, 322. I believe that's not right. It was, oh, this is already, yeah, 164. So cut in half, ton of free cash flow getting spent on research, which is on something that is not entirely proven yet. So it's a very, very big bet. And of course, that's why the stock is falling. Investors don't like uncertainty. That's exactly what that's exactly the vibe that Facebook's giving off, uncertainty about the future. So that's that recap, guys. But of course, you have Meta, which is hurt bad, and then you also have Google falling 9% and Microsoft falling 7%, but nothing compared to 20%, right? For a company that's been down at least 70% from the highs. So I'm sure you'll hear more about all these companies later. All we know is Facebook is having a hard time. Let's just say that. That's the simplest case for it. It's having a hard time. It's one of those cycles where you don't know if Facebook's going to last, but it probably will. But it just keeps falling. You don't want to find and hold the falling knife, right? You're going to cut your hand, or essentially your bank account, your cash. That's for you guys. I hope you are not losing as much money as I think you are. In all reality, everyone's losing money in this market, but the more you save instead of recklessly invest on companies don't do very much research on, the better. So I hope that's the case for you, and I hope you are making some money along the way as well as in the future. Thanks for watching, and until next time.